Good news for people hoping to enter Australia's property market next year. Price growth expected to slow in 2025. New data this morning from PropTrack reveals house prices are set to rise by 4% in 2025. That's down from an increase of 5.5% this year. Joining us live now is REA Group Director of Economic Research, Cameron Kusher. Cameron, thanks for your time this morning. So what's behind all of this?
Thanks, Pete. Well, we've been seeing prices, the rate of price growth slow throughout most of this year. And really the things that are driving the slowdown in price growth is the fact that interest rates are higher for longer. We're seeing a lot more stock on the market, and that's giving people that are trying to buy a lot more choice and a lot less desperation, I guess you'd call it, in the market. So people just aren't paying those crazy prices anymore, and that's leading to slower price growth.
So if there is a rate cut next year, whenever it could be, does the accelerator go back on prices again?
I think it'll take some time for that accelerator to come back on. And if we look at the first half of next year, we've got a federal election before the end of May. We know that usually slows down the market. We're also not expecting an interest rate cut until May. So maybe things will start to improve a little bit over the second half of the year. But we don't think it's going to be a particularly strong year for price growth, which is obviously good news for people trying to enter into the market.
Sure. And how do the cities vary?
Well, our expectation at the moment is that Perth and Adelaide, which have been the strongest for price growth this year, will see the strongest growth next year, between 3% and 6%. That is a massive slowdown from what we've seen over the last 12 months. Then we're looking at Brisbane with prices to rise between 2% and 5%. Sydney, we're expecting prices to rise between 1% and 4%. Then you've got Canberra, Hobart and Darwin, where each of those we're expecting prices to rise between no change and 3%. And Melbourne, again, is likely to be the weakest market over the next year. We think prices could fall up to 1% or rise by up to 2%. So pretty soft conditions right across the board.
All right, Cameron, good to have you with us today. Thank you.